In this video, I'm going to be going over one of the most important parts of my trades, and it's a manipulation leg. When we think of a reversal, a lot of you know what a reversal already looks like. And again, reversal, all reversal is something like this, right? Now, the manipulation leg is this leg right here, okay? And how do you know how do you know it's this leg? Well, it's always going to be paired with some sort of fair value gap to the left or something like that. And this is the important part about a actual manipulation leg. Now, what would a manipulation leg not look like? A non-manipulation leg would look something like this. See how we don't manipulate above the last high? So typically, what I look for any sort of reversal is some sort of manipulation leg on the lower time frame. It's the best bet. So, for example, if we tap a hourly fair value gap, such as this example, I never really like to take the first short off of it, okay? And it's because, yeah, we tap into the PD array right here. We tap into this fair value gap, but that's where everyone shorts, right? And we want to stop out the shorts who are short, if that makes sense. We want to start out the smart money who shorts here and then go down. And that's why I love the manipulation leg so much. So in this example here, you can see like waiting for that manipulation leg where we get the first peak and then go over it one more time. That's going to be your best trade. Whenever I'm looking for reversal, I really like to make sure there's a manipulation leg. You can literally just only use manipulation legs. The downside of taking a reversal like this without doing that manipulation where that last high breaks one more time is this is technically considered lower resistance liquidity. So what happens is sometimes there'll be like a false reversal and then we'll randomly get a manipulation leg up here, and then by that time you're wrecked, okay? And waiting for that manipulation leg makes it a much better chance for the price to run further, because if we don't have that manipulation leg, we create lower resistance liquidity, which basically means price will tend to go back at some point and then down, and we don't want that to happen. Right here, we actually got a really good example of a manipulation leg earlier, okay, where it looked like price was trying to bounce here, but we make one more low and then we go up. If I'm going to the market not even looking for a trade and I see this, I will take that trade, because look, if I'm going to the market not looking for a trade and I see just a random manipulation leg like this, I know that this inverse is bound to work, because we just bounced and then we have barely any displacement below this low and then we bounce again. This is just one of those trades where I'll take even if I'm not trading. It's funny. It's funny how I say that. It's a trade I'll take even though I'm not trading. That's how good it is. So see how we create a high here and see how we never actually take it out and then we go down. This is a non-manipulation leg. This is what I don't like to short, okay? So I would never really trust this for a short, even though it technically did work, because unfortunately at the top, we never really got a true manipulation leg. And when that happens, we create this low resistance liquidity, which causes us to go back up. So I know if I'm short from here, yeah, it might work for a little bit, but I don't know when we're going to get a giant candle at some point. I'm going to be stopped out. So this is an example right here where we don't actually get a manipulation leg, and then we get another long setup here out of this fair value gap, and it works really nicely. Same thing with up here. There's a lot of manipulation legs up here, except none of them trigger. So we create a high right here. We take out some sort of buy side. I mean, I guess this buy side would count. And we don't really have any clean entries here, but we take out a high, then we take it out again. But look, does the market ever violate anything after taking it out again? Nope. We take it out again, and the whole time the market's just holding this. It's just holding every PD array it's making. So it's not really a manipulation leg until we break it. And then finally we break this, and then we kind of dump to the next low. So sometimes you're going to have a lot of failed manipulation legs, but remember, you're not taking this manipulation leg unless we manipulate over it and then something's violated. There has to be two parts of this. It's not just one part. It's not just you shorting this. So right here would be a really good example, right? We create a high that hits a fair value gap. And remember, this is where a lot of people are going to short the first time. So what does the manipulation leg look like? It's going to be the second hump over price. And then we know it's the manipulation leg when we violate that fair value gap. And this candle alone literally violates this whole thing. So I know this would be a good short because it's manipulating over the one time where smart money shorted. Now we're the smart money because we waited for that manipulation leg, and then we reverse back into this LRLR, this low resistance liquidity, and go back to the low. So start using the manipulation leg. Let me know if you guys have any questions. And yeah, other than that, peace.